Welcome to the Explainer. You know California real estate licenses, they don't last forever. Whether you hold a salesperson or a broker license, that authorization requires periodic renewal. And for a specific subset of real estate professionals, well, there's an entirely separate layer of compliance to master, the Mortgage Loan Originator, or MLO endorsement. Today, we're going to break this down into two distinct, simple, parallel systems. Here's our roadmap for today. We'll be covering the 4-year renewal cycle, continuing education paths, the CE exemption rule, understanding MLO endorsements, and then we'll wrap up with a system recap and comparison. Let's jump right in. All right, Section 1, the 4-year renewal cycle. These are the baseline requirements for all licensees. So to keep your license active, you absolutely have to complete a sequence of 3 main steps before your 4-year window closes. First up, you finish your required continuing education, or CE. Second, you submit your application along with proof of that education. And third, you pay the fee. Only then does your license officially renew. It's important to remember that renewal isn't just some administrative toll booth. It's actually a strict compliance system that's heavily driven by ongoing education. Moving on to Section 2, continuing education paths. We're looking at first-time versus subsequent renewals. Let's look at your very first renewal. Out of your 45 total hours, you've got to complete dedicated 3-hour blocks in 5 core areas: agency, ethics, fair housing, risk management, and trust fund handling. After those initial 15 hours, you need a minimum of 18 hours focused strictly on consumer protection. That is a massive chunk of time. But the logic here is crystal clear. The state wants new licensees building an incredibly sturdy, consumer-focused foundation right out of the gate. Now, contrast that with subsequent renewals, so your second renewal and beyond. The total is still 45 hours, but you actually gain a bit of flexibility. Instead of those strict 3-hour blocks, you can take a bundled 1 to 8-hour survey course covering the core topics. But notice what doesn't budge at all. You still need at least 18 hours of consumer protection. Protecting the public literally never stops being the priority. When you put these requirements side by side, the shift in your compliance checklist becomes super obvious. Your first renewal is rigid. It's blocked out like a brick wall. Subsequent renewals offer that condensed survey course, giving you a slightly more streamlined process, provided, of course, that you still meet those rigid consumer protection minimums. Okay, Section 3, the CE exception rule. Let's talk about recognizing the 70-30 exception. For the long-term veterans out there, there's what's known as the 70-30 rule. You might actually qualify for an exemption from the 45-hour requirement if you've been a licensee in good standing for 30 consecutive years and you are 70 years of age or older. But please, take note of this massive compliance warning. Never just assume a government agency automatically knows it's your birthday. If you think you qualify, you must actively verify your status directly with the DRE. Section 4, understanding MLO endorsements. This is where we navigate the secondary system. To understand why the MLO endorsement even exists, we have to look back to 2008. The Federal SAFE Act was passed to protect consumers and severely reduce fraud in mortgage lending. Then, the very next year, California passed Senate Bill 36 to comply with that federal act. Literally overnight, certain real estate professionals dealing with 1 to 4 unit residential properties found themselves under a brand new federal regulatory umbrella. So what actually triggers this? The operational trigger requiring an MLO endorsement is highly specific. A California real estate licensee needs this if they take residential loan applications, negotiate terms, or service loans specifically for compensation or gain. It is not about what job title is printed on your business card. It's entirely about the specific actions you perform for money. As you might guess, the upfront compliance to get this endorsement is pretty rigorous. You've got to complete 20 hours of pre-licensing education approved by the Nationwide Multi-State Licensing System and Registry, or NMLS and R. This includes 3 hours of federal law, 3 hours of ethics and fraud prevention, and 2 hours specifically on non-traditional mortgage products. And finally, you have to pass a 125-question national test with a score of at least 75%. And the vetting? It doesn't stop at the exam. Because you're dealing with federal finance regulations, there are some really strict security layers here. You must submit your fingerprints for a criminal background check, and you have to authorize a credit report to evaluate your own financial responsibility. This is a distinct, high-security regulatory environment that exists entirely outside standard DRE parameters. Once you actually have your MLO endorsement, keeping it requires a completely separate, much faster timeline. MLO endorsements must be renewed every single year. You have to complete 8 hours of approved continuing education and file your renewal request online, specifically between November 1st and December 31st annually. Don't miss that window. Finally, Section 5, System Recap and Comparison. Let's bring it all together. To cement these parallel tracks in your mind, I want you to think of your California real estate license as your home base. It renews every 4 years, requires 45 hours of CE, and is processed through the DRE. The MLO endorsement? That's your secondary authorization. It renews every year, requires 8 hours of CE, and is processed through the NMLS. 2 systems, 2 entirely different sets of rules.
Now, I literally cannot emphasize this next point enough. This is a major, major compliance warning for dual role professionals. The continuing education courses you use to meet your 8-hour annual MLO requirement cannot be double counted to satisfy the 45-hour requirement for your California real estate license. These are totally walled gardens. You must track them, complete them, and submit them completely separately. Trying to double count is a massive pitfall that can jeopardize your good standing.
That brings us to the end of our breakdown. So, are your renewal tracks securely separated, or are you risking a compliance overlap right now? Remember, complex doesn't have to mean confusing, but getting it wrong, well, that means risking your livelihood. I urge you to map out your requirements and verify your deadlines today. Because in the world of real estate compliance, what you don't know won't just hurt you, it will cost you your license. Thanks for joining us on The Explainer.